All right, guys, we've got another Sunday scan coming at you this time. It's the last one for April. We're already into May for next Sunday scan. So once again, the months are flying by, which is not a problem. The weather's getting nice here, but the year is starting to really pick up pace. And one of the things that I think about when it starts to feel that way, when it starts to feel like the months are flying by, and we're already into almost May, it's time to look back and say, hey, have I been doing what I set out to do? Have I made the changes that I wanted to make? Have I been fixing the mistakes that I've been making? Or am I still doing the same thing over and over? And we went over that last week, and I had some of the most amazing feedback, probably one of the most engaging videos that we've done. And so I appreciate you guys leaving a bunch of the comments. And as always, you guys know that I reward that. And there was too many great pieces of key takeaways last week. So I picked a whole bunch because you guys hit it out of the park. So scans for a month, like I said, that goes to D. Harvey. Scans is like a scanning tool. But basically, throughout the day, you can set it to hit your parameters and tell you exactly what kind of stocks that you want to see. There's news, there's all kinds of things. You can see block trades. I mean, there's a million features. I don't need to go over them all, but for those of you guys that are in the room, you see how I use that daily as well. It's one of the many tools that I use. IU for a month, JB879123. So just email me, webmaster@investorsunderground.com, and we'll get you a month of IU. And then I'm throwing in the t-shirts too. Jordan G, Mr. Dumitruscu. I probably killed that name. And Fico, Feeko. Just email me as well, and we'll ship out those shirts to you. Very easy to do. Write your key takeaways right in the comment section on YouTube, and you're automatically entered and like the video. Share it if you want, but let's get right into it. I don't have a lot of time. I'm up against the clock. My wife has an appointment at 11 a.m. I'm doing this on Sunday, so I think I have 40 minutes. So hopefully it's a short one. Looking at the market as a whole, it's been coming in a major way. It kind of just snuck by, and sometimes these things kind of just, you look back and you're like, whoa, when did this happen? And something like SPY on Friday down 13 points. That's a big move, and couple that with the last 2 days, back to back, that's a massive unwind. So we've talked about this. This is not a thing of I told you so or anything like that. We know that this is just kind of kicking the can down the road. Everything that comes out that puts Band-Aids on things, we're just kicking the can down the road for later. And now we're starting to see interest rates, go sky high. We're starting to see some of the secondary kind of market, cars, boats, watches, all that kind of stuff start to come in. So, there's slowing action there, and you've seen the capitulation continue in all the other, kind of unicorn type IPOs and names of the past couple of years, as well as tech, which was the leader for quite some time. So, all the alarms are going off that, you've got to be cautious. We talked last week about, swing market versus not a swing market. Typically, if you go back a couple months, I tell you I never swing short anything. And I've been swinging short everything the last couple weeks. That has been working. As long as I'm on the right side of the trade, I have a good padding. Not oversized. I'm not trying to kill it every single night, but I will keep exposure on so that either if I'm wrong and it gaps up, I still have the ability to add, or if I'm right, I can add in that much faster to really be able to take advantage of the move. Because a lot of times, these moves such as ATR that we went over in detail, the continuation of that fade is just amazing. It's a really nice opportunity to be able to capture that 40 or 60 cent gap down, and then be able to use that to propel the next trade. So, but like I said, surprisingly, I haven't been too much of a part of the the macro kind of unwind. I haven't been trading the AMDs, the Apples. I missed BTU. I missed Plug, PLUG. And I think it's just because there's just so much, not necessarily in the small cap space, but more in the mid cap, where we've had like VERU. VERU was right after MNTS. So MNTS kind of set the stage like, whoa, this big, huge float type name has this continuation pattern and really, squeezes out on 100, 200 million shares. Then VERU did the same sort of thing as MNTS, only it actually held trend and pushed through the next day and ended up having a major short squeeze that we went over. And then we had CASA, C-A-S-A, and then that rolled into AVLR. So what happens is everybody wants to be in the next VERU. So when you see similar situations, the mind, just like everybody on Twitter or Discord or whatever, hey, you know what? The next XYZ is this stock, right? Well, how come you didn't know that XYZ was the stock before it was the stock, right? So everybody is so quick to figure out what the next XYZ is, whatever the hot stock was that just ran, but nobody knew it before. And the big movers always kind of come out of left field. It's when you're not expecting it. When everything's expected, it's rarely what you think, right? And so CASA and AVLR was a great example of that. So CASA was probably the one right after VERU where shorts got aggressive, but then they were afraid that it was going to turn into a VERU. So they ended up covering into the close. So it looked like it was going to be like a VERU because it was so strong, but that was actually the intraday cover of the shorts in the morning. Next day, weak, right? So shorts come in, shorts come out, no bid left. And then we had the same thing with AVLR. Everybody's like, all right, next VERU. And as you guys saw, that was a big home run trade for me because I got in there in the 8 to 840 kind of push. And like I said in the room, I feel like they're going to walk intraday. There hasn't been one yet where they do everything that looks like VERU, everything that looks like CASA, and then just walk, right? And they did. So it ended up being a really, really nice trade and ended up heading off midday that day. And, it's been that kind of action. It's been really, really nice 100, 200, 300 millishare type trades back to back to back to back. We had CRTX this week. CRTX was the most crowded trade. Everybody knows they're going to raise. We talked about it in the room. It's been the talk of the town. Like, yes, they're going to raise. We know that. It's very close. There's been an amendment. Maybe they do it tonight, Sunday night, raise, and then tomorrow morning it's real cheap. They had a catalyst on Saturday. So there's all these different things that you have to understand, play into the mindset of the buyers, the people actually kind of buying and believing in this thing, and then the funds that need the liquidity to kind of fill the book to raise it at a ridiculous discount. And so you kind of saw that with CRXT where everybody knew it was going to raise. And then we talked about that 215 level midweek. Needed to exhaust out. So, for example, with that particular trade, go back to last week's Sunday scan. Go back to the week before Sunday scan. All these levels are important because 215 needs to peak. If it doesn't, that voids your entire short thesis until it comes back under that level or until it blows off. And obviously we had a blow off to 380 or something like that. But being honest with yourself, you knew at 215 that should have peaked out there and it didn't. Then you knew 230s was starting to consolidate. You knew 250 was a nice ABCD breakout. You knew at all of those levels. So it's just, what did you do with the trade? Did you move on? Did you just stay with your starter? Did you scale? And when you do the scale, add against trend, obviously you were the cover at 380s. So that's what I mean about being honest with yourself, going back, looking at those times where you knew, pinpoint exactly when you knew that this is not doing what I expected, or this should have peaked out there and it's not. And if everyone is on the same page and it's not doing what you expected, that should set alarm bells off. And that should say, hey, I got to relax. I gotta wait for this to prove that what my thesis is correct, because right now it's not. And so we had the same thing CYN, where it's consolidating, nice unwind. It went to like 250, 230s, faded down to 170s. Great trade. But it looked like it was going to hammer down. It looked like it was going to unwind into the close. And it did. It slammed down to 170s, but it came back up to 190s and 2s. So rather than force the trade, it's okay to move on. And so as you guys saw, I ended up having a really nice trade down in the 170s, but I was letting it work because I was in from the 230s. And so I was trying to let that work, but it ended up holding 190s and 2s. And as you guys saw, I covered the 190s and 2s. And then I reshorted some after hours and then covered Friday morning. And I was showing you guys in the lounge because doesn't matter what I think. It should have cracked. It should have been staying heavy. And every time that I started to put some bids in to cover, they'd kind of fill me a little bit and then ramp it up. Fill me a little bit, ramp it up. So what that made me do is just swipe. Just swipe my exit. Just get out. Because I should be able to be being filled quickly and by size, a lot of it, if it's going to head lower. But the fact that every time it hits a real bid, not a couple hundred shares or, test it and it's like, oh, there's a buyer there. Swipe it up higher. That should be alarming that, hey, it's not doing what you expected. So that's exactly why. That's why I made it clear in the room. Look, I'm not trying to be a hero here. I'm moving on from the trade. We had the nice gap down from the reshort, and why fight on a Friday? So I think that pretty much recaps the last week. I think that a lot of people have trouble thinking that, even you, me, whatever, wants to be right, has to be right. It's not about being right or wrong on a particular call. It's about being right, making yourself more right, and how do you, really excel at that trade that you're on the right side of versus the one that you're wrong on, not scaling into it, not fighting it, and doing the right thing. Doing the right thing, either by moving on or not scaling into that starter, is right, not wrong. And so people need to understand it's not about, oh, I called this, I called that, I was right, I was wrong. It's about doing the right thing when you're in the actual trade and being able to adjust on the fly. If it should have faded down, some of the responses that I see on Twitter before I block them, for example, is people don't understand the concept of adapting, right? That's why they fail as traders. They don't understand that you need to adapt. And adapting means that if it should have broken down, and starts to head higher, it's likely going to go and break out. And I think I messed that up. It should have gone lower, should have broken down, and gone lower. That's what I should have said. I don't remember if I said it or not. But if it stops going down, there's a good chance that it's going to break out. And that is adapting. That's going from a short bias to a long bias. That's going from a long bias thinking that it should have squeezed out, but it hit a wall, to a I shouldn't be here or potential short bias. It's being open to the idea of switching based on what's happening. All right. This week's going to be a busy week. So tomorrow, Monday, I'll be leaving midday-ish. Lance, that I've tweeted a bunch of times, and Greg are in town with Zach from Traders for a Cause that most of you guys know. So we'll be meeting up in Boston, having a good time, and hopefully doing some good content, dinner, and all that stuff. And then on Tuesday, we have the BCRF event, and that's going to be fun because we got a big award, the Carolyn Lynch Humanitarian Award from BCRF. So that's pretty neat. Everybody that's been involved in Vegas or any of the virtual events, you guys are all part of that. And it's neat because it proves that we're making a difference, and most importantly, a notable impact. It's not just writing a check. We've made such an impact that we're getting honored as a whole, as Traders for a Cause. And I think that's really unique and awesome. And you guys should be proud of being part of any of the events that we've done and you've taken part of. So video topics. I said I was supposed to be quick, so we'll fly through these. Dogs, D-O-G-Z. Pretty amazing way to end the week last week. Had been tracking this each morning on broadcast. I had mentioned set price alerts. It's going to be close. I would suggest pulling up a daily chart. And you can see that the setup last time, and last time I'm talking about December into January, December 21 into January 22, was the same as the setup coming into last week. And that's why I was a broken record every single day on broadcast. Doesn't mean I'm trading it today, but set your price alerts. Watch for volume. Watch for the signs. We've gone over what I look for multiple times. Just like IMTE that you guys saw with the big unwind, the big short trade from 21 range down to the single digits, right? Same deal. And, the good part about these is, as you saw in the room, I continue to talk about the sellers in the tape. This time is different, right? So when it's rebounding, they refresh the sellers, rebound, refresh the sellers. Someone is liquidating. And to me, that means that I can confidently either scale or at least be patient with the trade until something changes. And that's why I was. Sometimes you get lucky with the fact that it circuits down at 4 and opens at 250, which is just an instant megabucks type of trade. And that's exactly what happened. And that was it. Closed down my platforms and left for the day. So I hope you guys all participated as well. That was a really nice trade. Nice way to end the week, like I said. MULN. I think, it's not to put the wrench in, but traders in denial, if that's you, be aware of it. The writing's on the wall. We know that it's a paper machine. We know that, all of this was going to happen. It just doesn't always happen on your timetable, right? It always, if everybody knows and everybody's doing the same thing, shorting, it's going to head higher or hold longer than you think, right? And then eventually paper always wins. So every rebound, we're going to have a chance here. And, it ended up popping after hours with the wrong PR. It was for a Canadian company. Nobody wanted to hear any difference. And in the morning, they ended up putting out a PR, and they're like, I told you so. This is why it was up. And then it closed at the low days. So be aware on what side of the trade you're on. And right now, we're in the denial stage of all these longs. They still believe that they're right, just like AMC. They still are fighting to the grave. They still believe that they will be right, even though they are now down 50, 60%. So just be aware. If that's you, and that was you this week, and that was your learning kind of moment, that's fine. At least you learned. Most will not. So take that as a positive and apply it to the trades moving forward. CRXT, we talked about how to manage that crowded trade. Algo in, algo out. AVLR, CASA, we talked about that, how we just set this one trade on a pedestal, like it's the next one of those. And then they can take advantage over the next couple, right? So that's how I go into these trades. The CASA, MNTS, AVLR, all these different names. But when it proves otherwise, when it should have broke down, when it should peak out a certain level and it's not, that means be alarmed, be aware. Don't fight the trend just because you think you're right. At that present moment, you're wrong. And the only way to stay wrong or make yourself more wrong is by adding or fighting the trend. Once again, if you're in a starter, that's a different situation. But if you're adding despite being wrong, that's when you run into issues. So, non-panic unwind. I feel like the market's just been this steady, slow unwind. So I would have a shopping list ready. If we have a huge gap down, I want to participate in that, more than likely. If we have a gap up, maybe we just have that pressure. But for the one, I'd be ready to dive into and react to would be a big gap down, a flush, and a rally. That's something that I want to be prepared for. I would go through your favorite list of names, figure out where they would interest you, and just be ready just in case. Doesn't mean it's going to happen, but you should have those 3 to 5 or 10 names that, hey, I wouldn't mind getting stuck in long term. If you wanted to do something for a longer term position, or these are names that I'd really like to own at this particular level. It's a great idea. And if it hits, it hits. If it doesn't, it doesn't. And then you have your risk based on your entry. So have that shopping list ready. And then we've seen a lot of one and dones. We talked about not swinging as much anymore. Swinging on the long side. We had RBLX, or not RBLX, RDBX, Redbox, and PLSE, CVM. CVM, we had that one-day wonder and then came back in. PLSC, we saw the same thing, and I had it on radar. I did not participate in it, but I was looking for the same thing. It ended up hitting more lows after that. So those are all just ideas. I'm not going to trade them all, but be aware of those one-and-done type trades, because sometimes we get used to seeing these runners. We're like, all right, this is great, this is going, and it ends up being a round trip by the end of the day. So just be cautious getting too bullish, too bulled up on a trade when there's no real reason for it to be going. A lot of these are just kind of, not liquidation rallies, but relief rallies, we're going to lay off, let everybody kind of believe again, and as they believe and they start to average down and start to buy the dip, it creates liquidity. It creates the ability to sell again. So, all right, let's get into the week ahead. All right, so as you guys know, not a financial advisor. These are not buy or sell recommendations. This is for educational and informational purposes only. These are my ideas. This is what I'm looking to do, what makes sense to me. As always, you should have your own plan. Make your own plan. My goal is to educate you as to what makes sense from a risk to reward type of standpoint. If you see the trade there, great. If you don't, avoid it. Dogs. Like I said, same exact setup as last time. We saw it twice. We know the history. Just have to wait for that day. We know they did the raise down here just like IMTE. They did that raise, and then they walked it up, and they unloaded everything. So it's not a surprise. It's just a waiting game. I have a couple others on watch for that exact same thing that we've also been talking about in the room. So keep those on watch too. Higher the better. I am currently still short some dogs. I put it back on into the ramp, into the close, or actually midday rather, where it popped up to the high threes again. I am hopeful that it gaps up, has a good push, fails, pushed, fails, and then, we kind of see it start to fade off. I would expect a candle like this. I would love to see it ramp up in the morning and then sit back down. There's no reason why it can't do that. I would gladly take a 4 push. Why are you short and you want it higher? Because I don't have the size that I'd like to have for the unwind. So again, as always, I don't take aggressive size overnight on the short side, but I am hopeful for higher because that will allow me to get a good entry, better risk reward, scale into the trade. But in the event that it gaps down, I can scale in that much faster because I already have a little bit of position. FNGD. I want to stay familiar with this one. Last time I was monitoring it, and I totally missed it. And this was the time when the market was coming in like crazy. And so this, you guys should understand exactly what it is. And just to read it out, it is the Bank of Montreal Microsectors FANG Index. So basically, if FANG is in the gutter, this thing's going to the sky. And reverse, when the market rebounds, FANG rebounds, then obviously this thing will come in like crazy. I prefer to short when this happens because it's 3x, and when a 3x unwinds, short side is the way to be, based on how they are made. And CYN, I am thinking, I would love to see a little bit of a gap fill here. I would love that, 290s. But I am thinking that most people were afraid that it would turn into something, and covered their position 250s, 220s to 250s, 260s, 270s on Friday. So I actually think that it gaps down 240s, 230s, and flushes out. But I am hopeful that it ends up going a little bit higher first, and then I'd be looking for that potential fade. If it starts to consolidate and grind higher, take note. Again, that's about adapting. You don't want to fight the trend. Failed follow-through setups. You guys know what I look for on failed follow-through. I want morning shove, failed follow-through, morning shove, failed follow-through, and then kind of fade off of radar. CRXT is a super popular one. I've been letting some of that work, but not super aggressive. Had a great average. Let it work. Covered into the flush under 2 after hours that day when I rode in the room, and then re-put some back on into the push into 8 p.m. Covered some on Friday, and hopefully we have an opportunity. But I wouldn't be surprised to see them raise it, a buck tonight, Sunday, or tomorrow, whatever. Maybe they get a little bit of a gap in a liquidity event, but for the most part, the squeeze came and went. The volume's gone, and quite honestly, they need to fill a book. So MITQ, higher the better. Looking for failed follow-through type of setup. Everybody wants to catch the next big runner. Right now, it's just about kind of identifying which ones have liquidity. You've got a day or two, maybe 3 days when they have, a couple 100 million shares traded. So for me, morning shove, looking for failed follow-through momentum. If it starts to consolidate over 150, take note. But for the most part, I think it'll probably come back and fill that gap towards the 120s, 130s in the short term. Mullen, obviously, daily driver, we know. Nothing that I'm too crazy excited about, but I'd love to see some bounces. Any 170s to, push should have a nice unwind, but it's only a matter of time before this hits lows again. Continuation section. This one I just wanted to buzz through a little bit real quick. We talked about this day over here. This is what I would consider a cleanup day, right? Where it ramps up and they just kind of let it, do its thing. So if you were going to sell, you would have sold. You had that chance to rebound. You averaged in. It didn't quite work, and then it fades off. You're like, screw it, I'm out. Next day, they come in and they support it. So that was the idea on Thursday, to watch this thing, because this might be the cleanup day for the real move. So now I'd be watching dips. If 750 holds, then we might have continuation. Otherwise, be aware that it could turn into a SEB situation, and what I'd be looking for is a gap up, ramps, stuffs, has trouble with Friday highs, and then fades off. And that's exactly what I'd be looking for on something like SKYH, where it kind of gaps up, ramps up to 830s, 850s, stuffs, and fades off. So those are the two trades that I would be prepared for on that. MDVL was fantastic liquidity trap, and then there was another liquidity trap, right? And we've got these wicks that we talk about. I sold a bunch this day over here, the 340s, 350s, I think. I think it was mostly 340s. I posted it in the room. Just, again, the reminder that, with liquidity traps, you want to take advantage of the squeeze. The squeeze is your exit. So, it can keep on going and going and going and going, but, more often than not, sometimes that squeeze is it, and then they move on. So I'd rather be selling and wish that I had held more than not selling and watching it fade all the way back. So I still have a position just because it's holding trend, but solid idea from the dips this day. 220 started to base, trend reversal, from the short side to the long side, trap and go. You guys all know I had tweeted it as well, so even if you're not in the room, you knew that I was long bias for the breakout. A couple others that I'm watching: BLBX, nothing I will go long. We know the history of this. I'd be watching for massive volume and then a dump. Same thing with REDU. We had the same situation as well over here. So higher the better. Let them do their work. And I'll be looking for the day in which they decide to dump. That's it. See you guys in the room. Remember, I think tonight is the last day for the sale that I talked about last week. So if you're interested in becoming part of the community, join up. If not, that's fine. Enjoy these free videos every Sunday, and we'll catch you in the room.